Um, I want to welcome everybody. I am here at Sunset Beach, North Carolina, and just for your information, it is raining today. But other than that, May's always a beautiful month to be at the beach. I would love to tell you guys that this is going to be an exciting and interesting presentation, but it's going to probably make your blood boil more than it's going to do anything else. Okay. My background is 40 plus years in insurance and finance, and was one of the original architects in building this program some 20 years ago. So I am going to walk you through it, but I want to do it quickly so I can answer any questions that y'all may have afterwards. It is a basic program that we did. A lot of it's going to be in there, and I will, and Liz and Jean both have my email address and my phone number if anybody wants to talk more directly about their individual churches. So we do have a program. It's called the PIP, the PIP program, and it is a community of right now 181 churches that in the state of New Jersey participate in this program. And the idea of it is that going back is that it was being very difficult for the churches to be able to buy coverage and maintain coverage such as umbrella, what we call the executive lines, and that's your directors and officers, your errors and omissions, your molestation and misconduct coverage, as well as some of the property coverages in some cases at any price. The smaller churches without programs and without big staffs were really struggling. So this program came together for us to be able to put a program together that allowed all the churches to have adequate insurance at a group buying price. So that was the foundation of what it was. And for the first many years, first 18, 20 years of it, U.S. Mercer, that changed names to U.S. Fire Group, was the carrier. They decided 2 years ago that they no longer wanted to be in the religious institution business because of their experience. Now, let's say we made money for them, guys. So just don't refer everybody against. We made money for them. However, Philadelphia Insurance Company took over the program 2 years ago. Philadelphia ended up with something like a 350, 400% loss ratio with us. So what happened, they too were reestablished in their book. Their appetite for religious institutions were shrinking, which then followed to them deciding that they no longer want to be in a program. You can go to the next slide, please. So what stayed is that our broker through this program has also been Brown & Brown. It's Brown & Brown out of Lehigh Valley. If anybody is in the insurance business or it deals with it, Brown & Brown is like the fourth or fifth largest broker in the United States. And what they did is when Philadelphia was obvious that they were not going to offer renewal terms to us, we went to the marketplace and they only gave us 60 days. So it was a relatively short window. It wasn't like we were in the market for 120 days prior to renewal. We had 60 days, and without U.S. Fire Group in the market, we went to the standing markets that can put a program together where we are dealing with one carrier, all coverages. That may change in the future where we have to start buying individual coverages from individual carriers. But right now, Guide One stepped up and was able to provide us all the coverages in the program that we were looking for. Next slide, please. Like I said, Philadelphia simply offered us a non-renewal issue with it. They said they would consider, out of the 181 churches, they said they would consider 24 of them. But basically what happened is they had around a 350, 400% loss ratio. The market, if anyone follows the insurance market, is getting very difficult. All you have to do is look at your home and car insurance rates. and then multiply that times 5, and you get the general marketplace out in the world. And on top of that, unfortunately, guys, we are becoming a more difficult class of business. And a lot of it is simply our churches are old. We have reduced staff. Our buildings are getting a little bit more beat up. And when it all comes down to it, is that the churches that used to have staff that were able to maintain the buildings and the procedures and all the moving parts are now limited. A lot of our buildings aren't occupied except on Sunday and maybe a couple of days from a church administrator or a pastor. So it is a little bit difficult. And because of that, the churches or religious institutions are becoming less desirable in the marketplace. Fortunately, Guide One is a religious institution carrier. They like this business. They say they know this business, and they were very, very interested and excited about being part of this program. Next slide, please. The good news is that as we went to Guide One, we did get enhanced coverages. And what I mean by that, each church now gets an individual policy with separate and distinct coverages with no shared limits. What was happening before with our executive lines, our directors and officers, error and omissions, molestation, and misconduct, those were shared limits. So if one church used up the $2 million limit in on the molestation, none of the other churches had it. Fortunately, it's not something that it's active because of the guidelines within a presbytery and the job y'all do in maintaining and educating yourselves on proper conduct. But the idea of it is each church now has their own limits that cannot be eroded by any other church or any other claim other than your church or your activity. Coverage is complete. It includes the property, the primary casualty, the EPLI, which is the employment. You see the EPL, which is the excess umbrella, and the executive lines. And the executive lines is, like I said, the D&O, the fiduciary, the crime. And below that, you'll see the molestation, the E&O, and those type practices. So all those coverages are included in one single policy. Normally, with a program this size, you would be trying to buy individual coverage from different carriers that specialize in this, but Guide One was able to provide us the entire group of coverages in one single program, with everybody having their own coverage with no shared limits to any other churches. You can go to the next slide, please. The good news is that the other thing that we were able to do is that one of the things that was driving up some of the losses is that Philadelphia mandated $1,000 or $500 deductible. What was happening every time a pipe broke, every time there was a leak, and someone submitted a claim, they were blowing through their premiums before they were even caught up on there, because Philadelphia would not even offer our churches larger deductibles for any premium savings. So what Guide One did was they tiered the deductible. So if your total insurable values, and we'll talk about this on the property, your total insurable values are your building and your contents, is under $5 million, you have a mandatory $2,500 deductible on a per occurrence basis. From $5 to $10 million, it's a $5,000 deductible. And if you are a larger church with values in excess of $10 million, the starting deductible is $10,000. I will let you know that if you can afford a larger deductible, you can go to Brown & Brown, and Guide One will quote you a program on your property to increase your deductible for premium savings. I know that when we did it at First Pres in Ridgewood last year, even though it was with a different carrier, the difference between a $10,000 deductible and the $25,000 deductible that we took was an $8,000 premium savings. So the idea is we paid for the deductible within 2 years. So the idea of it is if you can afford a larger deductible and you want some premium savings, you can do that by that request. The other coverage that I'm not happy with, guys, and I've made this very clear to Brown and Brown, is that the one Achilles heel to this program, with all the expansion in coverage and all the unshared or individual limits that we have, there is only $100,000 of business interruption extra expense on the program right now. And that was the one thing that I was really trying to fight for to get to expand it. And I'm hopefully next year we'll be able to do better. But the idea of it is that you can expand that coverage to $300,000 for an additional $500. So it's, again, you can increase your business interruption from, now the business interruption is your rents. It would be the loss of income that you have if we had to move due to a fire, a flood, et cetera, and in any insured, a wind event, and you had to move to another place, it would cover all those expenses. So the idea of it is you have a $100,000 limit, you can buy it up to $300,000 and an additional $500. My first recommendation to everybody is spend the money. It is far worth it, because just being able to have to go out and rent another place and be able to make up the difference, the $500 is not a lot of money for a $200,000 increase in coverage. Next slide, please. This is propaganda on Guide 1. It's basically they are a A-rated company. And just for everybody's information, if you do have the Brotherhood, Brotherhood has been downgraded to a B company. And I know that there are a lot of churches, and they are canceling some churches. So if you are with the Brotherhood, they are still a good company, but they have been downgraded to as a B company. And I know that they're struggling on a couple points. So for Guide 1, they are an A-rated company by AM Best, and they find and they enjoy religious institutions, and they are endorsed by our denomination out of Louisville. It is they are very, very active in our congregation and other denominations all over the country. So just so you know, they are a good company who really do understand our business. Next slide. We do have another positive here, is that one of the things that we had asked Guide 1 is that because we know that not all our churches are June 1st renewal, and if you want to look at a quote, they are willing to bring you into the program. You can receive a quote from Brown & Brown for all the coverages that are provided in the program. You just fill in an application, what you want, and they will get you a quote. If you choose that this is a program that you want to join in, you can come into the program on your effective date, and they will prorate your premiums to the June 1st renewal. So you will go to a June 1st renewal if you come into the program, but your annual premium will be prorated from your existing date to June 1, just so you know. They do have some underwriting capabilities. They do have some payment programs that you can go on to. And there's also some increased Presbyterian programs that you can participate in as it plays to Guide 1. So just so you know, again, if you want a quote, all you have to do is contact Brown & Brown. Brown & Brown will get you that quote. And if you decide to move your program, you will be prorated from your existing date to June 1, with June 1 being your renewal date. Okay. Next slide, please. This is mostly for our friends down on the coastal and southern. There are 5 counties that will have wind deductibles of 2 to 5% based on their construction if you're within 15 miles of the coast. We don't have that issue right now, but the idea of it is that it is a it was an issue for but 2 to 5% deductible is standard within industry. That if you went out and bought it, that's what would it be. They do have some buildings on the historical register that will be, with different limits beyond the standard. And then the wind hail coverage is that it's non-cosmetic only. So in other words, if you get a roof, if you have a metal roof and you get a dent on it, okay, they're not going to pick up that cosmetic because it didn't have it. They're going to pick up coverage where you actually have damage where the roof cannot be a roof anymore. Okay, so it's kind of a functional part on that. Next slide, please. One of the things that we were really fussing at Brown & Brown about was the idea that they keep putting out issues, and I'm sure you guys get emails all the time about seminars, but in all honesty, the seminars have nothing to do with what we really need for it to happen. So what we're pressing them on, they need to increase their services and make and be more supportive in what we're doing. So the one thing that you may get a call on, please, if you get a call from Guide One or Brown & Brown asking for a site inspection, please do not say no. That was one of the problems we had with Philadelphia. Several churches said that the inspector showed up and no, they wouldn't even let them in. So the idea of it is we can't deny an inspection service. If they put up money, guys, we have to be able to let them in and see our property. Brown & Brown will assist with our site inspections. They do have seminars on abuse and molestation training. We do have active shooting training. They do have the Presbyterian handbook that they do follow, and there are various webinars. The other thing that we're looking for is making sure that if you do have a claim, please communicate with people so we can get claim support going. And that is reviews, support, management, the whole bit. And that's both on the general liability and on the property and the executive lines. Because what we don't want to do is for Guide One to be putting up reserves, which we call incurred but not but not reported, or on an active claim with a large reserve that may not even come to a claim. And all of a sudden we get hit with a loss ratio that's unsustainable to them. But the thing is, the claim's not going anywhere. So we want to use Brown & Brown for claim support, reviews, management, etc. They're making a lot of money off of us. Okay, let's use them for both their risk management and claim support. Next slide. And as I mentioned earlier here, this is the Guide One, is they have a library of sources because they work so closely with the Presbyterian USA. The idea of it is that Brown & Brown is also looking to do active shooter training and site inspections, abuse molestation training. Those are the things that we were talking to them that we needed them to focus on. And Guide One has some really nice webinars and videos on these type of things on a library of resources that you can use for you and your sessions. Next slide. And again, this is the same piece, but the expectations. There is a downside to all this because of the hard market, because let's face it, when you get canceled, you're kind of subject to the marketplace in a non-competitive realm to what's going on. You're going to see somewhere on an average between 10 and 15% increase on your insurance premiums. So in this day and age, we had a choice. You can have zero, no coverage, or you can have an increased coverage with coverages behind a good company that can pay their claims. So the idea of it is that it is important that you understand that your premiums will go up. Please pay your premiums on time or on your scheduled payments if you do it, and allow Brown & Brown and Guide One to survey your property when they come in. We do have a very, very expanded coverage package that really does serve the churches. The other thing we're going to ask, and this was confirmed by all four of the presbyteries, the leadership of all four protect, please do not call Brown and Brown and ask for removal of coverages. We had so many churches say, I don't want to buy umbrella. I don't want D&O insurance for the executive lines. These lines are in place to protect you, your congregation, your sessions, your membership, the people who visit your church, as well as the Presbyterians. If you decide to remove a coverage, which Brown and Brown will not do, unless they get specific orders from one of the four leaders on the four presbyteries. The idea of it is, and if there's a coverage gap, it's going back to the presbytery. Lawyers are going to find where the money is, and they're going to chase it to wherever they can find it. So please understand, do not ask for, I don't need this coverage. We have gone through this many, many times. And believe me, every time you don't think you need coverage, that is the one that's going to bite you more than anything else. I had a call just today. Someone wanted to remove, we don't have any vehicles or non-owned vehicles. Well, the thing is, you may not have any vehicles or those type of things. But if you have a non-owned vehicle parked at your property and something happens and the car gets damaged on a non-owned vehicle, you are liable. If someone is doing a volunteer trip on behalf of the church and there's an accident, that person can sue the church because they were doing work in a non-owned vehicle or their vehicle because they were doing church for the work for the church. So please understand, if someone is hurt or if there's damage that's done, someone will be chasing that ambulance, guys, and they're going to be looking. So please do not allow to get yourself suckered that you don't need it. Believe me, we have thought about this long and hard for many, many years. This program is in place to protect you, your sessions, your congregations, and the people that are visiting, as well as your neighbors around you. So just understand that. Last one, I believe. One more slide. Nope, that's it. I'll open it up. Sorry I went so fast, but the idea of it is that the key factor is everyone's going to get their own individual coverage. No shared limits. It will be important that you do good evaluations of your properties. You can ask for larger deductibles. Please pay your premiums on time. Understand you may have surveys and inspections being done, and work with us and Brown & Brown to make sure that you take advantage of the seminars and the services being provided. With that, I'll open it up to questions.